Run it. I can't take no loss. I don't even know what it costs.
Hi, I'm the Conscious Day Trader, and today we're going to break down a trade that is currently live and we're in big drawdown. So a lot of the times I get questions on how do I deal with big drawdown. Everyone starts thinking about, what about the stop losses? What about the risk management? How do you manage these trades? And this is a great example. Today I was supposed to be live, but normally when I'm in a trade like this, I would like to deal with it first before I go back into the community and, trade live. But the reason is because when you're live, you have to deal with other emotions and stuff. So I wanted to make sure that I'm doing a video so you're still seeing the real deal, but we're not trading live in terms of having you there and commenting on what's happening on every minute, if that makes sense. So if you don't know who I am, I'm a funded trader with the Fivers. I trade a 250,000 account, which is now being hit by a 2,000 drawdown on there. I've been with them for a year now and a half. I have received multiple payouts. I'm also funded with instant funding and also Darwin X with 55,000. However, I have been caught with a difficult trade with the pound dollar, and I need to make sure that I'm going to trade this appropriately so we can secure the account and to be able to make profits, because this is my full-time job. So I need to see how I'm going to deal with this. Obviously I have my personal accounts as well, but the prop firm is a big part of that. I do want to use this for boosting my personal accounts, so I definitely want to be managing this appropriately. So let's jump onto the charts quickly. First we're going to go on to MT5. So here we are. Here we are, we can see at 8:45 London time, we had a drop, an enormous drop of this move here has done nearly 2%. So that is huge, absolutely huge drop there from the highs to the lows. I want to show you something that I've been working on in terms of my Tableau dashboard, where I'm tracking the closes of the moves, but to drop 2% on the pound dollar, that's a big move. I am anticipating this to come back so I can be able to trade it and to get out of this position. The reason I've put the Fibonacci on there is because I do love trading from the 23 to the 50. So if we see a break of the 23.6, then there's highly likely that we'll be able to manage this. But at this moment of time, probably this entry here is going to be my last entry to be able to manage this trade. If I get triggered in here and it doesn't bounce back, then I'll have to close it for a couple of thousand, which is a bit annoying because I wanted to build this account back to getting milestones. My big target this year is to hit a 1 million account on the prop firm, so we need to get back on it. Now let's break down a little bit about what happened. Why did I enter here, and what I'm anticipating for this to happen, how I'm going to risk manage this. And for the Vanguards who are watching, you'll be able to see a little bit about my mindset around big drawdowns and how I deal with them. Here we are on the beautiful pound dollar. Look at it, how red it looks. It's a big drop. Let's have a look again on this terms. We can see that 1.96% drop without retracement. Now, let's see historically, and this is where I'm going to bring my dashboard. So for you who don't know me, you know that I was a data analyst before for sports. So what I used to use is a lot of Tableau, and I've done a bit of analysis in the last, since the 71 all the way to the date, February, to see, I can choose now February, January, and different months to see how the pound dollar is reacting at different months. Now, I was in the trade already on this, but if we look at February, in the last 20 years, it has been a negative month for the pound dollar, as well as the euro dollar, even more for the euro dollar. But we can see now that we're currently on the previous year 2.4 close on the month. So this is from close to close of each month, from January to February, for instance, and we can see a drop of 2.4%. And the maximum is closed is 4.4% and 4.7%. So it has done more. So we have to be careful with this in case this is going to be moving lower. But overall, maybe this, I might start looking at this. For instance, if we look at the next month, March, it looks again very red close on the month. Yes, we have this 4%, but what I can do, I can actually exclude that from the data just so we can see the impact that it has. There we go, I can exclude that, and then we'll see that it drops still negative at 0.2, but not that huge difference. We can see the big 2023, however, was a 2.6 green month, so that is another thing to take in consideration. And if you took the last since 2016, for instance, we can see out of what's this 8 years, we've got 4 of them green, 4 of them red, so 50-50 on that historical data. Okay, back to what the trade has happened. So as we can see, if we go back to our MT5 just to see the entry, we can see my first entry here is a retracement to the 127, and it also was a nice retracement back into that was after NFP. I shorted this. Damn, I should have shorted it further. That would have been a brilliant trade. And I know Russ from the Vanguards did short this for an incredible trade. He's doing amazing as well. So if we take a Fibonacci on this drop, on this move here before the NFP, we can see I thought we're going to fail at the 38%. I thought we're going to be bullish on this. Obviously I was wrong, and I started staging in at the 61.8 and also at the 76.4 between the 100. I was doing this on a bigger time frame, so I'll show you on TradingView, but obviously that didn't work. And now we're going to discuss why I entered one lot here, as you can see, another lot here, and now my third half lot, I am placing it on the bottom here. That will probably be my last entry if this breaks the lows. Now you're going to see a lot of lines on here. Obviously my background comes from learning from the scruff, so you know these lines from the Scruffy Trader. You also know previous daily highs and PDLs from the ICT. There's a combination of that which I've kind of developed my own strategy now, which works really well for me. However, this push here has been very aggressive, and I thought we're going to hold the price that we've been developing. Have been 3 prices. There's been an attempt to hit the 128 once, and then price consolidated around the 127 until we broke lower after NFB and the bullishness on the dollar index. Now the question is this an over exaggeration because of the dollar index and also because of the equities returning great returns? Like Meta was returning about 20% in one day. So is this an overreaction on the USD? We will find out in the coming days and coming hours, I guess. But what my thing here is, how can I manage out of this? As we can see, we broke below the 127 as a price, and we broke below 126 as well. We tried to hold it for a little bit. We could reposition there once, and then it broke lower, and now it's created a previous daily low close to the 125. 125 is the price that I'm willing to pay. If I think of institutional traders, imagine if you're trading loads and loads of money, you have 125 and you have 124. But obviously at 124, if it pushes down there, it is possible, we've got monthly levels down here, it is possible that it does break and go lower. I won't be able to partake in that because I would literally blow my account, so I won't be able to do that. But I'm still willing to look at this idea here, the last idea, the last strong position for me to manage out of this. If we break lower and it doesn't give us an opportunity to manage this, then I got it wrong, I have to kill it, and we're going to have to go back to slowly building the account back up, which is a bit annoying. Also, this has hit hard my Darwin X. Look at this, 55,000 allocation, super happy, first trade, and I get this trade here now. So on my Darwin, we've gone to a max drawdown of 6.86, so that's a massive drop here. I'm really gutted about this because I was doing really well on this, hitting on the 180s in the traders, so I'm a bit annoyed about that, allowing this to happen, especially when I know I couldn't open, because I took some profit out. I took about $600 out of this account, $500, sorry. So I left 1,100, and that made the account a bit vulnerable. So I couldn't reposition. I've only got 3 positions in, and now that has been a big drop. It's going to be tough to recover this for this month, but we'll see what happens. Okay, so what's our plan here? How are we getting out? So the big question here, what I'm waiting for to see is if the price is going to retrace back to the 23, which is the previous 50% of equilibrium. If we close above the 23 with a strong candle, then I'm anticipating a move to the 50% in the previous daily high. If that happens, I will be able to secure this trade even for a little bit of profit. Now, if the case is that we go and retest the 23 but don't break above it, and we start closing and breaking down below it, getting to the 125s, sell side here, as we know from ICT, below here, this swing low. If we find that sell side liquidity, and we can see here we've got 125, we've got multiple sell side liquidity, this will be my last attempt to save this this trade. Now, let's say as it stands now, if I also add another position, this I might not be able to handle this price going so far down. So what can I do? I can risk mitigate. And what do I mean by that? I have a trade like somewhere up here, where it's my worst position. I have another trade up here, which is my second worst position, and I have another trade here, and then another one somewhere here. I've got about, let's have a look. I've got 1, 2, 3, 4, 5 half lots in there. So 5 positions, and my 6th is pending. And that in total is going to be 3 lots because they're half lots. So 1 lot up here, 2 lots up here, and now this is in the range of my 3rd lot. Now, what I'm going to be doing is, as we are getting back, I've got 2 options. Because I haven't got a position here to reposition this one, what I can do is use this profit from this trade here to risk mitigate the worst entry. So I can use this profit and close part of this profit. Let's say I make $200 on something like this. If it breaks below, even though amazingly if it goes to the 50%, then I can use that profit to take a little bit of profit and close most of this trade out. Because without that trade, now suddenly the picture looks a lot better if we're around here. Now, if that doesn't happen and we're crashing lower, the only way I'm going to be able to risk mitigate this when I get my last entry in is to start either repositioning this one completely or doing the same thing, waiting for the price to go higher and closing the worst entry that I've got partially. That is called risk mitigation. I've got loads of videos in the Vanguard where I explain this in detail and how to do it step by step kind of thing. Now, do I like these trades? No, I don't. Can I handle these trades? Yes, I do get these trades 2-3 times in a year. It is unfortunate. We can't anticipate a 2% drop in pound dollar without much returns. Look at all the previous dates. It's always returning back to 50%. It's very rarely, even this move here, you can see we had a huge move up here, retraced back to the 61.8. So if this is going to retrace, the question is, are we going to be able to handle a lower price? That's the biggest picture. And how can I risk mitigate this to be able to handle a lower price? And that's what I call trade management. I'm a trade manager. I'm not a day trader, as they say. Okay, there you go. That's the update on where we are with that trade. Hopefully tomorrow I'll give you another update on what we've done with this trade. I don't want to go live whilst I'm in this because, as I said, I don't want comments about, oh, you should close this or you should open this, because that potentially, not that will affect me that much, but when you have that noise there, you have to deal with it. When it's not there, you don't have to deal with it. So yeah, I will let you know how I've managed this out. And I'm hoping if you're in the same position, make sure that you do your own, this is not financial advice. Make sure you do your own risk management. If you need to put your stops in, close this, then do it. But this is another thing that's going to make us stronger, better traders, and we know that we have the talent and the experience is there with all the payouts that we're going to go back to recover that account and make top end of these accounts in the 5 years. So looking forward to that. And I see these drawdowns is just one drawdown less that I need to hit in 1 year, because the rest is going to be green days and pushing the accounts up. Make sure you subscribe to the channel and like the channel. Also follow me on Conscious Day Trader Instagram, and you can watch me train there and everything I do in Bali. Full-time trader in Bali, no other income. So the real deal kind of thing. The goods, the bads, and whatever comes with trading. Finally, if you want to find out about our internal group, our Vanguard membership, which we have more than 25 videos, 2-hour videos on everything that I do, psychology, setups, everything. You also join us on the Q&A every Wednesday. Make sure you comment Vanguard and I can send you the link to you can upgrade to the Discord. Otherwise, if this works out, I'll see you Thursday for the live, because tomorrow we're going to be doing another video since it's Vanguard Day. I spend the time with the Q&As, and Friday hopefully we'll be live if we have managed to deal with this trade out. Either way, I'm gonna let you know what happens, and we are quite transparent here, and that's why with the Conscious Day Trader, I want to show you the real deal. Have a good one. I'm hoping you're on the other side of this trade, or if it's going up in the right side. I'll see you next time.
Run it. I can't take no loss. I don't even know what it costs.